Morning, this is Al Vickery at AL Waters Capital in Braintree, Massachusetts, and this is your video morning call commentary for Wednesday, December 8th, 2010. Futures are pointing a little lower again this morning after the Dow basically finished flat. Very modest loss of about 3 points yesterday. The early rally just didn't hold on. There was certainly some optimism as Washington moved towards extending the tax cuts as part of a compromise to also extend the unemployment benefits. There are about 2 million citizens out there that are facing losing their benefits in the coming weeks if it weren't for that. So that was certainly good news and was met very positively in the marketplace, not only here but across Asia and Europe, all looking towards the U.S. For some hope at this point. The European debt crisis continues to be as much of a problem as it's been the whole time. Irish Parliament did pass an early round of debate on their austerity budget, and it does look like that will move ahead in the coming days. But of course, from there, all eyes turn towards Portugal and Spain. Portugal's deficit is unbelievably high as a percentage of its GDP. But even more concerning for European investors is Spain, who has the third largest deficit, just over 9% of GDP. But of course, their economy amounts to the size of several of its neighbors. And of course, the ECB and European officials decided to let debt purchases in the marketplace run their course rather than enlarge the size of the emergency fund available, which has a lot of investors very concerned should further problems arise in the sovereign debt crisis there. It's already been said that the present size of the fund is not enough to provide a bailout for an economy as large as Spain's. Gold set a record high once again of $1,430 during the day, and then of course pulled back just as sharply as the day wore on, losing the $1,400 mark. It has recovered pretty well this morning, still lower by about $5, trading at about $13.95. But all of this with the dollar still on the upswing. The dollar has softened a little bit. It benefited from higher yields in treasuries, which again was a result of progress and passage in Washington of the tax cuts and employment benefits extension. Rare earths continue to be in the news from both sides. A lot of hype over the importance of these elements. Even more talk about whether shares of companies like Molycorp and Rare Element Resources are in some sort of a bubble because they've gained so much attention, even though they're not operating at full capacity at this point. And sure, they have certainly run up. Molycorp shares jumped more than 18% the day prior on word that Sumitomo in Japan was interested in pursuing a stake in the company. And they did kind of retrace their steps a little bit, got a little ahead of themselves. But let's face it, rare earth elements are critical in our lifestyle with technology devices, and we don't think a lot or enough has been said about their importance to military strategy in some of the defense weapons that the U.S. military has. China at this point commands at least 94%, some say 97% of the market for rare earths. This actually prompted Hillary Clinton to pressure the Chinese when they said that they were going to continue reducing exports of these elements. Now, listen, they did agree to keep the tonnage of their exports at the same level. Problem with that is there are about 17 elements included in what is called rare earth elements, and all China really agreed to was to keep the overall tonnage at the same level. Problem is, this could easily mean that they would increase some of the lesser valuable or less rare, less important elements out of those 17, and some of the ones that are all the more critical they could reduce and still meet the terms of their agreement. So we think prices are going to continue to rise. Shares in Western companies pursuing integration in rare earth minerals will continue to do well for some time now. I think this is a real investment opportunity over the course of the next 1 to 3 years, really. And we'll continue to monitor the markets, watch some of the shares, possible M&A activity, such as the conversation between Sumitomo and Molycorp. There's a lot of possibility in this area from many different angles, and we'll continue to monitor that. Overall, we expect not a lot of volume and not a lot of movement as we close out this year. Any volatility and any price changes, not only in equities but in commodities and gold, are most likely to come from consolidation at the end of the year. Gold should finish the year relatively strong, but with so many new institutional players jumping on board for the gold trade, we certainly could see some profit taking and consolidation as we close out the year. So we don't expect major movements, but some fluctuation in the coming weeks. Again, this is Wednesday, December 8th, pardon me, and we will see you again. Happy trading and good day. Thank you.